Hello Wolfpack, we're back here on Bitcoin. Before I even get into the rest of the video, I want to take a moment to kind of go over the Crypto Academy Become a Trader course. My friend and fellow analyst Mega Crypto and I have created a Become a Trader course. So if you want to take advantage of the bear market while the market's boring and learn how to trade, you can do that at thecryptoacademy.courses. The website link is in the description below. And also I have a VIP membership in which I post a trading signal every second day. As well as that, you get access to a 2-hour video on altcoin on market psychology and many more added perks. So go ahead and sign up to that as well for 40 AUD a month, which is extremely cheap. And then straight into the video here. So Bitcoin still lurking in the 30k region. I have kind of consolidated this support zone. I previously said it was 30k. I will actually go back on that a little bit. And upon the recent candle closes, upon what we're seeing right now, let me delete all of this so you guys can see it quite clearly. We can actually see that the support zone isn't necessarily stemming from 30k. It's actually more stemming from 28.6k. If we zoom in, 28.6k is the major kind of last level of support for Bitcoin. If you zoom out on the Bitcoin chart, you can see that 28.6k is very much the shelf that Bitcoin is sitting on. If we drop below that, there's really nothing left until all the way down here in these brief support blocks, and then actually below that it'd be like 12, 14k, right? Where do I think Bitcoin's going to bottom? I've said it before, I'll say it again. At the 200-week SMA, which is currently at 22k, I think Bitcoin will reach that region. It can go below that, however, at this point, that's where I think the bottom will be. But just looking at this chart and just looking at the pure lack of support, I know this isn't the best chart to look at it on, but the pure lack of support on Bitcoin in this chart, we can really see, if we lose 28.6k, there's really not much below us right now until those lower prices like 20k, like 24k. This is the last level of support in order to maintain any form of some sort of healthy macro structure. And I don't think it's going to hold personally. When will it break? I don't know, but eventually I think it will. So going back and bringing back all of the analysis that we've done here, and if we want to bring back stuff like the MACD and the RSI, what we can see is that, it's on support, Bitcoin, that being, it's on support. It's seen a bullish MACD cross, and it's also seeing bullish divergence on the RSI. And so there's a few indicators here, including, adding to that, the Bollinger Bands are saying that it's quite undervalued. It's under the 20 SMA, so it's undervalued on the Bollinger Bands. And the Bollinger Bands are quite wide as well. And so you would be assuming, based on this TA, in a general normal market state, that Bitcoin, potentially would be looking for a small bounce in this region, possibly to 33k, maybe a little bit higher. I'm not going to go ahead and predict anything like that. I just don't simply think it's logical to make predictions in this price region. It's very much a price region in which everyone is collectively on the fence. And so there's really not much clarity as to what's going to happen next year, but we can be certain of the fact that, well, we're on a knife's edge for Bitcoin. I'm pretty sure everyone can agree that if we drop below 28.6k, all you need to do is zoom out to what I just looked at before. There's nothing below us. And looking at something like the volume profile, it's really just consolidating that opinion. Right now on Bitcoin, what you can see, and the reason why we're not moving even to the upside, right? So what people would say is that, hey, we're holding 28.6k, right? We've held it for quite an extended period of time now. It's been about a week, a little bit more than a week. Why aren't we seeing some reaction? Why aren't we seeing some sort of bounce? And that is an interesting question. I think that kind of falls down to the volume profile to a certain extent. Okay, so what you can see is that the volume profile at this point, what I can explain what it is. The volume profile is a indicator that kind of measures where the historical trading volume has taken place on Bitcoin through these massive steep hills and valleys here on the right hand side of the screen. When you have a steep hill and valley, or where you have a large portion of the volume profile spiking, it means that a lot of historical trading trading volume has taken place in that region. And when you're below that, it acts as resistance, and when you're above that, it acts as support. So what we're seeing now is that we're actually lodged just below a major region where a lot of historical trading volume is taking place. And so in effect, it might not be clear by looking at the normal chart without the volume profile, but with the volume profile, in effect, we're kind of lodged between 28.6k and around 31.7k, right? There is a major resistance block starting at 31.7k, stemming all the way up to 38k, and we're right below that right now in a nice little crevice between 28.6 and 31.7, and Bitcoin is ranging quite tightly. And so now that you understand that Bitcoin's ranging quite tightly, which a lot of people wouldn't understand, right? This is kind of, I haven't seen anyone talk about the volume profile at this point, in this price region, and hence no one's really understanding that Bitcoin's actually compressing right now. So When you see compressing or compression, it only can take place for a certain period of time before there is an explosion. It's like holding a beach ball under the water. Eventually, it's going to come up. Like when you let go of it, it's going to come up to the top of the water and it's actually going to bounce out a little bit. You're compressing it down. When it finally lets loose, it comes up and it bounces, right? And that can go both ways. It can come up and bounce to the upside or to the downside. And I do think that Bitcoin might be in for, even potentially, it could be even a couple more weeks of compression here. I think the price action in this price region could potentially get very, very boring. But the thing is, we don't need to make predictions on that because all we're looking at right now is 31.7K as according to the volume profile and 28.6K as according to the horizontal support line. So once one of those lines are crossed, that's it. That's you're going to determine where the price is going. And if we're moving forward onto something like the hourly chart, we can really start to see that there is a downtrending critical resistance line on Bitcoin. And if we wanted to straighten it up, I've kind of had a hard time finding out where this line should go here, but we could really do something like that. And if we did something like that and drew it like that, you can see it's on the verge of a breakout here. We're kind of coming up to that right now. So one of two things can happen where we can break out to 33K or we can break down below 28.6K. But at this point, it wouldn't be illogical to assume that there is more compression needed here. However, the hourly chart is showing that, well, the price is already compressing quite sharply and we could see a short-term move in either direction quite soon. We have discussed that in previous videos quite a bit. And one of the things we discussed actually was a bearish pennant formation, which actually led to a breakdown, but it was a fake out because we bounced off 28.6K and now we're interacting like this. So this yellow line that I've drawn up here is the major critical resistance line we're looking at in the shorter term price region, but I still stand by the fact that 31.7K and 33K are the critical resistance regions in the medium to longer term. If we break above 33K, that would confirm a full dead cat bounce in which we'd go to something like 36 to 38 for sure. But I know this is all just speculation. If we go here, we're going to go there. People hate hearing that kind of stuff. And so at this point, I'm just going to keep it very simple. 28.6K is what you need to look at. 33K is what you need to look at, right? Those are the two regions. We're compressing between those two regions right now. If you want it to be really precise, you could say 31.7 is the top region. But there is intense compression going on right now in the market. And before we even head into the next part of the video here, I want to talk about BitGet Exchange. Now, I previously had a pre-recorded video running when I talk about BitGet. I don't want to do that anymore. I want to keep it unique. Why do I use BitGet? Why do I like BitGet? Well, I'm in sponsorship with BitGet. I'm in a partnership with BitGet. I'm not doing it for the money. I'm not doing it because I'm just trying to chill out the channel. I actually do it because I genuinely think the exchange is very good. I personally, and if you were a V.I.P in Wolves Crypto V.I.P, you'd know that I use BitGet and Binance. I use BitGet mostly for futures trading and Binance for spot trading. Now, some people would say, well, why do you use futures trading? You've said you don't like leverage. Yeah, you don't need to trade leverage to trade futures, right? You can trade either very low leverage or 1x leverage, which is basically just a spot position but reversed. And so, yeah, I do that occasionally. But I think that BitGet is very good mainly because of the fact that I can't access leverage. I can't access futures on Binance anymore because my location in Australia. The great thing about BitGet is you don't have the KYC. And the trading fees are much lower than that of most major exchanges, 0.02% maker and 0.06% taker, which is a 0.04% trading fee on average. You'll notice that Binance has a 0.1%, so it's actually twice as good as Binance in terms of trading fees. So highly recommend you check out BitGet, referral link in the description below. Very good exchange, very low fees, and very good regulatory evasion, I guess you could say. But I do like BitGet a lot, so check it out. Moving on with the rest of the video here. And there's just a few general macro things I would like to talk about before we get into the questions. For those of you who watch my channel a lot, you can feel free to skip parts of this part of the video, but I do talk about it every video. I'm going to talk about it again. The 4-year cycle theory is a theory on Bitcoin that's been playing out ever since the first halving, and it's based around the halving. It basically predicts that every 3 years there'll be a bull market, and and out of those 4 years, so 1 year bull market, 3 year bear market, and out of the bear market, there's basically just 1 year of very much downside and then 2 years of accumulation. So 1 year bear market, 2 years accumulation, 1 year bull market. That is the 4-year cycle theory. We've seen it play out time and time again. And according to that trend, the 4-year cycle theory has predicted the November top was valid, and it has predicted that the November bottom, so we will be bottoming out in November 2022. That is what it's predicting, or around that time period. It's a very rough estimate, but it's around that time period. And according to the 4-year cycle theory and according to the macro trends, we can assume that that bottom will be happening at around the 200-week SMA, right? Moving forward, we've got the 21 EMA on the monthly chart, and this is an interesting one because every time we lose the 21, you can see I'm circling here, we see a massive 40 to 70% correction. We've lost it again here. The monthly candle closes in 11 days, and that means we have 11 days to get back above 37K before a confirmation that another one of those major corrections will occur. Moving forward even further, what would need to happen for me to be bullish on Bitcoin again? As I spoke about before, I rely heavily on the 200-week SMA, and what happens with 200-week SMA is basically every time we lose the 50-week SMA, which is this red line here, we end up with 200. And so the macro trend is lose the 50-week, end up with 200. Lose the 50-week, end up with 200. Lose the 50-week, end up with 200. And since that macro trend is there, and since I'm acting under the assumption that you should invest with the trend until it ends, until we get back above the 50-week SMA, I will not be bullish on Bitcoin again. And that means until we get back above 44.5K, I will not be bullish on Bitcoin again, right? Now it's trending downwards at this point, but that's where it is currently. So the 50-week SMA is what I'm looking at for the longer term trend. And then what we can also see is the same indicators, the 50 and the 200, have seen a death cross on the 3-day chart. We've only seen that on 2 other currencies in Bitcoin's whole price history, both in 2015 and in 2018. And we've just seen one right now. Both times it led to a major correction before a bear market bottom. We can see we're in the midst of that major correction due to that death cross, and hence we can assume that the bear market bottom will be near. And so some people would say, well, if the bear market bottom's near, what about that November price prediction? Well, it doesn't need to be November, as I said. That's the most likely target. It's somewhere around there. Now, and of course, the death cross, it's only played out 2 times. It isn't a trend yet. It's actually a speculation until it's played out 3 separate times. And so we could, go downwards, lurk a bit, and then bottom out in November after a second leg down. It's really hard to say, but the point is the death cross is not a good sign for Bitcoin, and it's already kind of played out massively to the downside. So now we've got the question segment. I know a lot of people like this segment because it's new content every video, but I'm answering your questions here. If you have any questions you want me to answer, feel free to go down and chuck them in the comment section below, and I will be sure to take a look at them and potentially answer them in the next video. But we've got Salt here who says, thanks for the video. He says, do you look at hash ribbons? That's irrelevant to this video here, but I've got this next part of the question that I want to answer. He said, do you think we might not hit the 200-week SMA as we did not get a blow-off top, thus the 200-week SMA is lower on the value because of that? Appreciate your work. Now, a lot of people would say, and looking back at the 4-year cycle here, that because we didn't get a blow-off top in the 2021 bull market, we can't expect the same price targets to be met at the bottom. What I would say to this is, what is the definition of a blow-off top? It's very subjective. This 2013 cycle was very different to the 2018 cycle, right? In fact, there's no distinguishable blow-off top in the 2018 cycle. I mean, if you wanted to stretch your imagination, you could say the blow-off top occurred from 3K to 20K. That would be a 400% gain. But the blow-off top in 2013 occurred actually all the way at, a 1,500% gain. So we've already got the blow-off tops between the 2 cycles that you're assuming there was a blow-off top in being, the blow-off top in 2018 being 4x smaller than that of 2013. And so remember, this 2018 blow-off top was 400%. The blow-off top in 2021, well, I don't know how you define it. That's the thing. You could say it was 100%. And that would be 4x smaller than the 2018 blow-off top. But again, the 2018 blow-off top was 4x smaller than the 2013 blow-off top. It's just a very vague statement that I think people who are just filled with hopium use to kind of think the bear market bottom might be a lot higher. But I don't think it's actually based in reality. I think that just saying the word blow-off top, it's like, what is that? That's not a charting pattern. That's not that's not a candlestick pattern. That's not an indicator. It's just a vague phrase you're using to describe some sort of price action, and it doesn't really have any constitution in reality, really. It's actually just very subjective. And so I don't think, the fact that we didn't see a subjective imaginary blow-off top would mean we don't bottom out where we usually bottom. We didn't see a blow-off top before we bottomed out in the 200-week SMA in 2019. So what's the difference now? It doesn't make sense to me how people use that word, is what I'm trying to get to say. So when you hear the word blow-off top, take it with a grain of salt, because it's very, very subjective. I mean, even when we're looking at the 2 great, majorly, I guess you could say, assumed blow-off tops from 2013 and 2018, the differences there are very intense. And so what's to say that, the blow-off top we saw from September to November wasn't a blow-off top? It just has diminishing returns. It's hard to say what a blow-off top actually is, because it's not a real thing. It's just made up. So no, I don't believe that's a reason why we won't hit the 200-week SMA. And then in a video I made in relation to basically saying altcoins will die in a bear market, most altcoins die in a bear market, which a lot of people think is controversial, but it's just what we've seen historically. This guy said, is Ethereum considered part of this? And to that I would say, no, not necessarily. Now, I don't think Ethereum has the capacity to die in this bear market. I think too much is built on Ethereum, too much of the cryptocurrency ecosystem in general relies on Ethereum. There's a lot of coins built on the Ethereum network. A lot of the transactions occur on the Ethereum network. Ethereum is a very fundamental part of cryptocurrency at this point. However, it's not as fundamental as Bitcoin, and it still can be reversed. So do I think Ethereum will die in this bear market? No, not at all. But I think there is a decent probability that in this, not necessarily this bear market, but in future bear markets, Ethereum could easily be overtaken by some sort of ecosystem with better technology than Ethereum. Ethereum is notoriously high in transaction fees to the point where it's basically unaffordable for most people to transact on that network. It's very expensive to build on the network. It just, all in all, I think it's a little bit outdated. And so, to assume that Ethereum has the same staying power as Bitcoin, I think is a little bit illogical. But do I think it will die in this particular bear market? No, not at all. I think it's too big to die in this bear market. And I think regardless of the fundamentals, I think it has built itself up to a certain standard in a similar sense that Bitcoin has, where regardless of the Bitcoin technology, Bitcoin's always going to have a place in the market simply due to the brand that it's built. I think Ethereum has kind of consolidated itself as one of those big brands per se in the crypto market. I think that marketing power might be enough to bring it through the other end of the bear market, but I would not be surprised in the slightest if one day, I don't know when, some sort of new coin or ecosystem takes over the Ethereum network and takes that number 2 spot. But do I think it will die in this particular bear market? No, I don't think so. But regardless, that's the video, guys. Thank you for watching. Hope you enjoyed, and I'll catch you in the next one. Cheers.